Hello everybody, a very good morning to you all and welcome back to another brand new week in the markets and another live stream here at Taurex and at Moss. It's very good to have you with me today because there's so much to talk about. It's a huge week in the markets. We've got Federal Reserve interest rate decision, we've got Bank of Japan, we've got Bank of England. It's the central bank week basically, and this is where things move. And they move quickly, and we need to be ready for those moves as they come out. So I'm coming on today to hopefully give you an insight into my ideas for this week. I've got no trades on at the moment. I'll talk you through the trade that I placed live last week on the stream on the CAD Japanese yen pair. I also posted it in the Discord channel, so I've got an update on that trade as well. I've actually got a lot of updates actually. I've got a really great announcement for Wednesday's stream, and let me explain what that is in just a second. And what else have I got? And on Wednesday's stream as well, actually, I'm going to show you. What I've been working on, which is my my trading bots, my EAs for my strategies, which are now ready to go. So I wanted to show you a quick show on my screen just to show you what they look like, because they're going to be included in some way in the mentorship and the courses that are coming out hopefully in the next few months. Still waiting for that to be edited as well. So there's a lot of work going on in the background to get all this up and running and looking good for anyone who wants to benefit from that. So really excited for that as well. Hello to everyone in the YouTube chat who's decided to join me today. A bit quiet actually, a bit quiet in the chat. Maybe everyone's hungover from the weekend. Where is everybody? But anyway, it's good to see people that have joined so far, and I hope you're all doing well and you had a good weekend and you're ready for, maybe they're just scared of this week, but we're not. We're going to tackle it head on, and we're going to have a look at where I think the best trades are going to be for this week, which is going to be a tough task because I think it's going to be really volatile this week with what we've got coming out. So let's start with the announcement for Wednesday. You may see on the YouTube channel that I do normally stream on a Monday and a Wednesday. What I've decided to do is I've decided to start covering the big events, the big high impact events like NFP, inflation, and Federal Reserve interest rate decisions live on stream for you. So even though on Wednesday the Federal Reserve decision for me is out at 10 p.m, I'm going to be in the office streaming that for you. Not only that, I'm also going to be giving away $100,000 in Atmos funded challenges and 50% deposit bonuses into Taurex. So there's going to be something like 10 winners on that stream. So it's going to be a big old stream. So I need you guys to show me some love on the streams. I need you to, when I do the announcement video today, I need you all to repost it for me and stuff like that, because we're going to do big giveaways on the live events. And the first one is on Wednesday, and it's scheduled currently on the YouTube channel. So make sure you have your notifications turned on and you're following me on social media to join. 100k guys, 100k I'm giving away. Anyway, that's that. Hello to the people in the YouTube chat. African Entrepreneur, hello to you. Bobby, good to see you. Barkav Lakum, good to see you. Hope you're doing well. Thank you for joining today. We've also got Selvi, we've got Saint616, Brett's back. Hope you're doing well, Brett. And thank you for coming back. Hope you're all good. Thamoigi, hello to you as well. FX Master. Saint616 is ready for some action. We are indeed. It might be a bit quiet today, but I'm expecting it to kick off pretty quickly. Tharun, hello to you. Good to see you. Who else we got? Sian Dut 89. We have got. Who else have we got? Curtin. Hello to you, Curtin. Curtin, I'm going to go through the CAD yen trade for you. I promised you. Sorry if you can hear some background noise. There's people talking next door. Can't do anything about that. I'm not sure if you can hear it. We've also got Fataya on the stream. Hello to you. Good to see you, mate. Hope you're doing well. GP MO1B, hello to you. Lot the gamer. No, I'm not necessarily going to be trading the news. Like, do you mean when it's live? Oh, I'm going to trade this week for sure. Yeah. Because I have an idea of what's going to happen this week. So I will be trading if I see my opportunities. The news doesn't bother me. I place my trades regardless of the news, unless it's like about to come out. But if I don't avoid a week of where it's high impact news events, I'll just trade my plan as it normally is. M. Hasib, hello to you, good to see you, sir. I hope you're doing well. Thank you very much for joining. A lot of the gamer says I will be there. Yeah, Brett, I'm not quite sure. I'm not quite sure whether I want to give away 10 10,000 accounts, or maybe 10,000 accounts and 25,000 accounts, maybe something like that. What would people prefer? Let me know in the chat what you'd prefer, and I'll do whatever anyone else wants. I've just got to give away 100k in some way, so I'm going to be doing that. Which pairs are we looking at today? Yeah, let's have a look at that then. Let's just quickly talk you run you through the week in a very quick way, just to tell you when the events are coming out. I'm not going to do a huge Fed breakdown today because I'm going to save that for Wednesday's stream before I do the event live. I'm also going to, fingers crossed, what I'm going to do is I'm going to host the Federal Reserve, can't get my words out. I'm going to host the Jerome Powell conference next to me, so we can watch it together and we can go through what he's saying and stuff like that, and see if there's any changes. So, look, Monday and Tuesday of this week, today and tomorrow, there is no high impact news that we need to be concerned about. It really is all about, what's coming up on Wednesday and so on. I'm actually on the wrong week, which doesn't help. Give me 2 seconds. Saturday, Sunday, Monday, Tuesday, we have got some high impact news events. We got retail sales out of the US, a little bit of a warm up event really. Let's be honest. Retail, obviously it's important to look at retail sales, don't get me wrong, but it's not as important as what's coming up the following day, which is the Federal Reserve interest rate decision. When this loads for me, I'll zoom in and show you. The giveaway criteria is very simple. All you've got to do is comment win once on the YouTube chat whilst I'm live, and it enters you into a live draw, and then I just keep drawing out the winners, and it will randomly pick the winners. All right, simple as that. Rakes, hello to you. Nikhil, hello to you. Hope you're doing well. Thank you very much for joining. Okay then, guys, looks like people want to do the 5 lots of 10k and maybe 2 lots of 25k. I'll give away merch as well, but we can't really send it across people aren't in the same country as me. It'd be a bit difficult. Anyway, Federal Reserve out at 10 p.m. for me on Wednesday. That's the biggest event of the week, bar none. We do have the Bank of Canada interest rate decision as well just before that. And then as we head into Thursday, we've got the Bank of England interest rate decision. And then as we head into Friday, we've got the Bank of Japan. Canada, US, Bank of England, Bank of Japan. 3 massive central banks. 4 big central banks, but 3 big ones. Big pairs. Dollar yen, pound dollar, pound yen, USD CAD. All of those markets this week, they're going to be pretty crazy, I think. So, look, if you're somebody who doesn't like that sort of volatility, then sit out of this week because it won't be a good week for you. But if you plan your week right and you manage to get into a trade fairly early before the event, you can always protect yourself by moving your stop loss closer to entry, particularly if you're in profit, or you can lower your risk for the week in the event of huge news spikes. That's up to you. Good morning to you, Adolphus. Good to see you. Hope you're doing well. Mochrobi, hello to you. Wonder19. Mayank, hello to you as well. Hope you're doing well. Okay, so let's start with my my update on my CAD yen trade from last week. This is what the trade looked like. As you can see from my comments, previous fair value gap, which was broken. I actually traded the long side of it and made a bit of profit. And then I traded the short side of it when we got the test here. If I zoom in, remember this? I traded the short side, here. And as you can see, initially started moving quite nicely. I think that was off the back of US inflation. We started to get some nice moves last week. And you can see the trade ended up getting fair value gap. As you can see, the trade reached a 1-to-1 risk reward, pretty much bang on, 1-to-1. So, as always, as what I always do when I reach 1-to-1 on my trades, I close half of the position off like clockwork, and then look to see if I can find a more sensible stop loss If I just go onto the trade ideas section. So I didn't move my stop loss initially, but I did close the trade out for a small profit. The reason was because it was late on in the week. I didn't really want to hold it over the weekend necessarily because I saw the gaps from the week before. I didn't want to get slipped above my stop loss. So I did end up closing the trade probably around, I think it was around 106.7. So overall, about 0.7% profit. Sorry, no, because 4 hour, 2%, about 0.7% profit overall. So I'm actually out of the trade now, guys. But if you were following and you're still in the trade, it's still valid. To be fair, I'm actually sort of half tempted to re-enter here because I'm right at where my where the previous fair value gap was, and put my stop loss above this wick that was created last week on Friday. Because I think if we come above there, then we're going to probably come and tap up into the 107.5. So actually, what I might do, I might just do that. Things move quick, don't they? So I'm going to re-enter on that. Where is my CAD yen? Sorry guys, I'm just trying to find it on MetaTrader. My brain is not functioning today, that's for sure. CAD yen, where is it? There. Yeah, so I'm going to stick a couple of lots on. Okay, and then my stop loss is going to be where that wick is that you can see on the screen in front of you. That's going to be my, personally, my stop loss. 106 point, what is that? 106.9. That'll do. Let's see how we go, people. Let's see how we go. And remember, I'm not giving out signals or anything like that. I'm just documenting my trading journey with you. And this is one of the manual trades that I like the look of right now. Let's see. No stress if not. And I've only done 1% risk, by the way, because I made 0.7% on the previous trade. I don't want to risk another 2% on it. So I'm going to do just a 1% risk. We'll take a look at gold as well, of course. Gold's going to come up next, but I just wanted to give you an update on that. So already we're in a trade fairly early doors this week, which is nice. Just reading the chat. Candela FX, hello to you. Vina, Defender. Epores Only Elder, hello to you. Good to see you. Brett, since I married a Japanese girl, do I get lifetime leverage on Japanese trades? What do you want more leverage for? But yeah, you should. That should be a thing. Maybe request it. Maybe I'll ask Taurex for you. Unlimited leverage for Brett because he's married a Japanese girl. And congratulations, by the way. The hello to you. Das. The dealers, hello to you. Good to see you. Bargav, you only need to comment win once, my friend. You only need to comment win once. Is it a bank holiday today in Japan? That's all right. Markets are still open. But yeah, I probably won't get much movement. You're right. But I'm not a scalper. It's not a scalp trade. That's a 4-hour time frame, so it's not the end of the world for me. But yeah, good shout. Okay. Right. Let's get our head around the dollar again. Like the sort of main thing I like to look at. So, gold. As we know, gold has been very gold-like over the last few weeks, and we've had a new surge higher, and we've created new all-time highs. And now we're at that time, we're at that moment in time where I say to everybody, be careful. Why do I say that? Because it's simple market structure. When you see a big impulsive move to the upside, could it keep going? Yes. But what's your risk reward from buying gold right now, other than like fully leveraging yourself? and just buying and just holding on to it and just hoping? What if it corrects down to here? What if it corrects down to 300-400? The structure would still be bullish, but you'd be in a massive loss. After the market makes its trending move, typically what we see is either a period of pullback, retracement, or a period of consolidation. For example, when we go back to April of this year, when we saw the big impulsive move higher, everyone was buying gold up here, and I was telling everyone to be careful because there probably will come some sort of pullback or some sort of retracement or some sort of consolidation. And what we got was April to August, April, May, June, July, 4 months of nothingness in gold. Can you imagine how many blown accounts there were in that time period where no one was trading gold, where people were trading gold? A lot. Anyway, ignore that. We've now got the next wave higher. It's even bigger, the impulsive move that we had. So, for me right now, I'm on high alert that we're going to start to see some chop and churn at the all-time highs. Now, does that mean I'm bearish on gold? No. Does it mean I want to sell gold? No. If you're going to sell gold, and I think that, to be honest, the risk reward of selling it is obviously higher than the risk reward of buying it, because where would you put your stop loss if you were going to buy gold right now? Maybe below this wick? Maybe. But what are you going to target? What are you going to target? The all-time high, or are you going to target what? An area that's not been tested before? Just be very careful in trading gold. I'm not saying you can't potentially try and catch the pullback, or you can try and trade the range between sort of 3,600 and 3,660. I'm not a scalper, but if you wanted to do that, that's possible. You just need to wait for the market to come down into your discounted areas to buy, or your premium areas up at 3,660 to sell. No issue with people that do that. It's not anything that's necessarily worked for me in the past, so I don't. I think that gold will consolidate for a bit. And the reason I think gold will consolidate and not have a deep retracement, and I might be wrong, is because of the US dollar. Gold to the moon. And the reason I think gold will consolidate rather than have a steep pullback is because of the weaker dollar story, right? And why have we got the weaker dollar story? Let's have a look at the dollar index, and I can show you what I mean. I know people who have come onto my streams all the time know I keep going on about this same analysis, but it's still important. It's very important. The pressure on this area of support now is at breaking point for me, from what I'm looking at. And I'm looking for, as you can see by my arrows I've already drawn before, I'm looking for a move down to 95 in the US dollar. Why? Jobs data is coming in weaker. The Federal Reserve is starting to cut rates. And inflation is remaining fairly sticky. Now, normally in a time of inflation remaining sticky, higher inflation, more of a hawkish Federal Reserve, stronger dollar. But this time around, we're seeing, I wouldn't say we did see higher inflation last week, it's a fact. But the reason the reason that I think that the dollar will go lower despite the sticky inflation is because of the data, which is the underlying data underneath it, with economic data, jobs data, manufacturing data, that sort of stuff, is starting to weaken, and they're starting to see some cracks. Now, in a time period where you have weaker economic data, but persistently higher prices, that's known as stagflation, and stagflation is disastrous for the economy, which is not a good thing for the US dollar. You see what I mean? This isn't like a normal high economic growth, high inflation environment. This is starting to see slower economic growth, but prices, CPI prices, are sort of still staying at a fairly sticky level. That's the reason why I think the dollar is really struggling to gain any momentum. And when you compare that, when you link that to gold, which is why when we did finally get, that gold was starting to break down, and we weren't really seeing that pop in the dollar, which I was initially looking for from this area. That's why we then, not the only reason, but that's helped gold prices go crazy. So as long as the dollar remains bearish in that sense, it's going to be hard for gold to really see a a meaningful correction, should we say, and more of a consolidation. Now, I would openly admit as well, looking at both sides of the story, is that we do still see a dollar index which is trading within a support zone, which is why you get that sort of contradiction and why it's always best to wait for confirmation instead of jumping into a trade straight away. But for me, we've tested it now 1, 2, 3, 4, 5, 6, 7, 8, 10 times, and it's in fact the volume in the candles is getting lower the more we test it, which tells me there's not much demand there. Even I've called it a demand zone. It's not really living up to its name. And I think we're going to potentially start to see a breakdown below 97. Now, obviously, a lot of this does depend on not what the Fed are going to do on Wednesday, because they're going to cut 25 basis points, I think. I highly doubt they're going to come in with 50. If they did, then we're going to see a much, much sharper move lower in the US dollar. It's more going to be geared around how Powell communicates the rest of the year. Because if he still remains, we're not sure, we're going to data dependent about the next injury. If he doesn't really confirm more cuts are coming, the markets may see that as hawkish in a way, or less dovish, and then we'll see a pop in the US dollar and probably a fall in gold. But we'll explain that in more detail on Wednesday's live event stream. And then when you look at euro dollar last week, I mentioned how we could see gold could see euro dollar rally from this 61.8, yeah, and it did. We did get a big flush out on CPI, but if I actually put in, and I probably should have this level in there, if I actually put in the 78.6, look at that. There's support here for euro dollar. And so for me, it was a really difficult market to sell, despite the fact it had that breakdown below its yearly trend line. It looks to me like the any bears that were in play, we can see how we're just getting that. You see how we're just getting that grind. It's just grinding and grinding and grinding until it's going to take that one, I don't know, maybe a 50 basis point cut from the Fed, or a much more dovish Fed, more interest rate coming, that sort of thing, weaker data, and we're going to see euro dollar finally pop up to that 1.2. That's my base case for the markets at the moment. That's my base case, is that euro dollar is going to hit 1.2. And when you look at GU as well, it looks even more likely to have a run at the previous yearly high. This was the biggest area of resistance that we could possibly see. We even flushed it out back in August, middle of August. Saw some we actually sold. Also, I actually sold cable in this time and made a bit, but then you can see the dip buyers came back in. So there's an underlying weakness here in the US dollar, which is making me think that we're going to start to see GU, EU, dollar yen potentially pop higher. EU and GU pop higher and dollar yen lower. I'm just reading some of the chat now, just in case I've got any questions. How long have I been trading? Trading well. Just trading in general, probably 9 years. Trading well, maybe 3 or 4. Took me 3 or 4 years to really learn from my mistakes and stuff like that. And I still make mistakes now. I think anyone who says they're a perfect trader is a liar. I don't think anyone's perfect. You always do maybe something slightly wrong, but if you write it down and learn from it, you'll make yourself better and better over time. You don't need to be perfect in trading. In fact, in trading, the biggest thing that I find is that you don't even need to be right. You see my CAD yen trade there, for example. It's from the original trade it was in. It's in drawdown, or the GU and EU sells that I done a few weeks ago. They would have hit stop loss if I left them, but because I have a risk management plan in play and I managed to take some money off the table along the way, I can make money even though I'm wrong. Obviously, there's loads of times where I'll just hit my stop loss or I won't make anything. But trading don't have to be perfect. You don't have to be right all the time. You definitely don't need to be right all the time. Um, I should be a lecturer. Thank you very much, Lohan. I appreciate that. Nice comments. Thank you. Um, how to pass a funded account step-by-step guide. Find your edge in the markets. Set yourself a risk. Write yourself down a risk management plan for when you before you place the trade and during the trade as well. Because in prop firms, I think it's important to even more so to take some money off the table, because you're trying to hit that profit target. Don't try and do it all in one trade. Stick to your plan, find your edge, back test your edge, forward test your edge until you know you've got an edge in the markets, and then execute with no emotion. Which one do I use more, fundamentals or technical? I'll tell you how I use fundamentals, right? Because obviously it's my job to be an analyst, yeah? So I've got a degree in economics, so I understand fundamentals. I know plenty of traders that don't even like look at the fundamentals. The bots, the EAs that I've got, that I will show you on Wednesday, if you turn up on Wednesday, I'll give you a sneak preview. They don't care about fundamentals. They just follow a system. But I will always have some skin in the game when it comes to more subjective strategies, which are like what I think about fundamentals. I use them as like my bias for the week or my bias for the trade. What do I think fundamentally about the US dollar? Everything I just told you there is what I think. Therefore, I should be selling US dollar. Then I go on the charts and I look at the technical analysis, smart money concepts, some chart patterns. I don't really have like a systematic, a real regimented mechanical approach to that sort of thing. It's a lot more subjective, and it's my manual way of trading. I enjoy doing that. Trading with the EAs and the bots and using my systems that I know that have got back-tested results is boring. And I wouldn't come on the stream and just show you that. So there's more value to that. So I enjoy doing that, using the fundamentals as like my bias on the higher time frames, and then trying to execute that using the technicals to marry it up. How can you use fundamental knowledge? Well, good news is, in my course that's coming out, I have a whole fundamental section which goes through all of the big events, what that typically means for markets in general. Now, there is an element of experience in this as well, because I can teach you the theory behind fundamentals and how they work, but sometimes it doesn't always work like that because situations in the economy are different. The global financial crisis of 2008 was different to the COVID crash of 2020. So once you understand the theory behind fundamentals, you can start to apply it to the real world, and my mentorship will help you with that. So that's the best way to do it, but it's not ready yet. So I am sorry, but keep an eye on the like my social media channels and stuff like that, and yeah, you'll be able to benefit from that. When is the September funded account program starting, please? I'm not too sure on that. Please message one of the moderators in the Discord channel. They'll have more information on that, to be honest with you, Umar. So sorry about that, but if you drop a message in the Discord, they will answer pretty much straight away. Will there be another trading contest? Yeah, I think so. Yeah. I've not heard anything, but also I'm swamped in recording and content and streaming and all this sort of stuff. So I don't have control over that. That's not my job. I'm the head of education. Okay, I think that's it for the questions. Was there any other? So we've got some more questions. These questions are good. Adolphus says, Connor, August this year is my 4th year in trading, but I'm still not making it. Do I still have hope? Yes. What people need to understand about trading is, don't listen to the people on social media who are claiming, you can get rich quickly and all this get rich quick stuff. It's not true. None of it's true. Can you get rich quick trading? Yes, and that is the great thing about it, and also the worst thing about it, because the access to quick profits is what gets everyone excited. Obviously, that's just human nature, but also that more 95% of the time results in exaggerated losses and blowing accounts. So in order to make it, you have to look at trading from a completely different standpoint. You have to block out all the noise. I know I do social media. If you go on my Connor Woods Trading Instagram, I share a bit of my life. I do show my trades, and I record content, helpful educational content. Not once will you see me on social media renting out a Lamborghini with a picture on MT5 showing $150,000 in profit in one day, because it's not true. Them guys are marketers. Also, I can't do that, even if I wanted to, because I'm employed by a regulated company. So we follow regulations. So what I would suggest you do, Adolphus, is take a look at your strategy. Have you back tested it? Ask yourself that. And if you haven't back tested it, have you at least forward tested it? Then have you journaled your trades and wrote down how you feel when you take a trade? Have you learned truly what risk management and psychology is in trading? Or are you over risking, over leveraging? Because it's probably that, but also it could be your strategy. But I've one-to-one mentored people before, and I'm telling you from experience, the people that come to me and say, I just can't find the strategy which makes me money, like I keep losing, they blame their strategy over themselves. And I would say 85% of those people, actually it's them, not the strategy. Their strategy's fine. So keep going. Look, we're going to have the one-to-one sessions and the mentorship coming out soon. In that meantime, if you haven't got a journal up and running, send me a message. I can send you my journal template and you can start journaling your trades. And that was one of the best things I ever done. Because when you write it down, you can't hide it away in your mind. It's there right in front of you. So if you really want to learn how to trade properly, you have to take more of a long-term approach and find your edge and know that your edge will work out in the long run. But also, there will be times where you have drawdown. I found that out from when I've been backtesting strategies. It's even made me look at trading differently, even in the past few months when I've been backtesting my EAs. Love the questions. Thank you very much. A course on backtesting would be beneficial. Yeah, I can probably sort that out. Maybe we'll include that in the next phase of the academy. Maybe I'll do some advanced for my premium members. Maybe I'll do some like private backtesting sessions. Hope that helps. Okay. By the way, I did forget to say, I am doing the giveaway today. I'm giving away 20k today and 2 lots of 50% deposit bonuses when you comment win. So I think people have already known that because they see me commenting. People are already commenting win. But yeah, I am doing that, I promise. Stock market for this week. Well, we are at all-time highs, ladies and gentlemen, on the US 100. In a time of slightly weakening growth, but also in a time of Federal Reserve interest rate cuts, the markets don't believe there's an economic slowdown coming, because if they did, we wouldn't be trading at all-time highs. Is this a trap for the big move lower, or is this just the stock market being the stock market and having to move to its new all-time high? Look, I think regardless, the current situation we're in right now, yes, there's weaker data, but it's not alarm bells ringing off in my head yet, or anyone's head. So I think when the Fed cuts on Wednesday, and they will cut, how much they cut is very much likely to be 25, but would they cut 50? Well, I imagine. It's going to be cheered, because an interest rate cut is a good thing for the economy. Fact. It's a factual thing. It's a injection of money, of flow. Money flow into the economy. It's a good thing for stock markets, and that's why we're seeing the stock market higher, because the markets believe they're going to start cutting. It's just if we start to see the Fed cutting because they have to cut situation, which is where the data slows down. So look, the stock market remains for me as a buy the dip market. We didn't really get too much of a pullback on the S&P 500 or the US 100, so I'm still waiting patiently for that. You can see though, these pullbacks do come. Like for example, if you waited patiently for this one, you would have got a nice trade. And it's the same sort of thing. Yeah, we just need to just be patient, wait for the next pullback. Maybe around here, 6540 on the US 100, on the US 30. Probably this area here, 45,561. I like that. I haven't been a big trader. You know what? This has been the year that I've traded the stock market the least. to be honest. US 30, someone wants actual analysis on US 30. Yeah, no, for US 30 for me, what I tend to do, especially in the stock market, especially in a really bullish market, because sometimes it never comes down into like those order block areas, like those deep retracements. Sometimes, a lot of the time, you don't get them because it's very bullish. But when I look at what I normally do is I look from the low to the high, and I just go up and just tag all and just start marking all of the demand zones that haven't been tagged in. So that's not really one because that didn't really cause a break in structure. That is there, right? That's a support zone, 44,000. Also, this is a support zone. Okay, and I think this is as well. So this happens quite a lot as well. You get sort of three areas. You get aggressive entry number one up here, tight stop loss, higher chance of it losing, but also a better risk reward. I'd probably do half risk on that. And then you've got the next area, which is like your middle area, which is where, you could see a liquidity sweep on this low into this demand zone and then move higher. Sort of normal risk on that. Like sort of, let's say, for example, I did 0.5% on that one. And I don't know why I'm pointing because you can't see. 1% on that one. And then, fingers crossed, if we got a deeper retracement down into like the real discounted area, which is the third one, 44,000, that's where I would probably put slightly more risk on, 2% or something like that in those areas. So they're the three support areas that I like for the US 30. And I'll look at Bitcoin as well. You're welcome. So let me just go through questions in order. Have I missed anything? Have I missed it? If I've missed your question, can you rewrite it, please? Your best advice about random Telegram trading changes. What? I don't know what that means. I'm not really a Telegram user, so I wouldn't know. Has there been some changes? I use Discord. Sir, if the market makes all-time highs, how can I start approaching and hunt for buyers, and what target will I hunt as my DOL? When the market makes all-time highs, the easiest way to trade it, and people snub at this because they go, oh, it's too obvious, but it does actually work, is you use the previous all-time high, which would have been potentially resistance, or you use it as support. So it's a break and retest, essentially. The other way in which you do it is you go through and I just mark all the order blocks and all the like the FVGs and the imbalances along the way. And I just analyze to myself which one is the more aggressive one. Obviously this one, high risk reward, maybe a bit of a lower risk lot size. What's my one that I really want to see? That's the one that I'll probably like put the most risk on. And then in terms of the target, difficult. It's difficult buying things at all time, trading things at all-time highs, because you're right. The target becomes the previous all-time high, but sometimes that doesn't give you a good enough risk reward. Or you target somewhere above it, but then you run the risk of not catching your high properly, because then you're just guessing. So yeah, and that's why you rarely see me at all trading all-time highs. It doesn't work. Okay, Daniel, yes, sorry, my friend. Hope you're doing well, Dan. Swissy yen, you want to go long, but you're not sure if you should wait for a bigger retracement. Let's have a look. You want to go long? Yeah, that was breached, wasn't it? That was our area of supply here. That was breached quite comfortably. FVG, was that last week's FVG? Yeah, it was. Into this demand zone. Yeah, longs look pretty good to be fair. Okay. What's that look like on the 4 hour? Yeah, there's a bit of imbalance in here. Little bit of imbalance in here, Dan. I understand your concern about waiting for a deeper retracement. I mean, this is all pretty balanced. I can't imagine that we've even, if you look at where the move initially came from, by the way, perfect demand zone, beautiful reaction. We even then had a reaction, made a move higher, come and tagged into this FVG, and then it was go time. And then you can see this FVG was filled. Then we created the gap. That gap's been filled. Now we've moved higher. I mean, from what I see, it's pretty good to go from here. You're getting a slightly better entry as well. Super tight stop loss though. 10 to 1 risk reward. Yeah, I don't really like this because you can see we've already mitigated it and made a move higher. In fact, we made a 1-to-1 move higher, and now we've come back into it. So ignore that. The one thing that's screaming out to me is when I zoom in here. Got some liquidity at this low, and also FEG. That could be the deeper retracement that you're looking for. And look for something like that. Does that make sense? Sir, your face looks like the actor Rupert Green. Nice. Fair enough. Fair enough. I don't really know what to say to that. I look like Ron Weasley, basically. Nice one. That's made me laugh. That's really thrown me off. Really? Do I look like that? Does anyone else think that? Oh, that's funny. That's funny, that is. Omar, you only need to Omar, you only need to put the question in once, mate. I can see it. It's fine. I'll answer it. How do institutional traders manipulate liquidity, and how can a retail trader identify it on a chart? That's going to be it's going to be a lesson on the academy as well. Liquidity is normally seen at sort of swing highs and swing lows, like in its basic form. The idea behind it is, I'm going to tell you the theory behind it, and then I'm going to tell you what I really think. The theory behind it is basically that the big banks and institutions deliberately manipulate the price by placing a particular order. Let's say a sell order. Let's use this as an example. Yeah. Swing low here. The big banks will deliberately place a trade to manipulate the price to grab all of the liquidity which sits below or above a high or a low. Because in theory, what you get at these big areas, of what you get at these swing highs and swing lows are a lot of take profit levels, don't we? We all target highs, we all target lows. That's an order. That's an order in your broker, isn't it? When you take profit at a particular area, that's an order that goes through into the markets. At the same time, a lot of people utilize buy stops and sell stop orders, which is where they can use a continuation trade below or above the high. So what they say big banks do is they use these areas to target, grab the liquidity, and it gives them the other side liquidity needed to generate the price in their direction. That's the theory. How much of it's true? To To be honest with you, I don't get too caught up in whether it's true or not. It might be, it might not be. I don't. If I had, I probably would say it isn't. I don't think that big banks are out there looking at my stop losses or looking at our stop losses as retail traders, because they trade such larger volumes. However, I do believe there are. Well, not. I don't believe that factually there are liquidity pools at those big highs and lows because people have their take profit orders set there and their stop losses. So it just happens to be that when you get to those areas, when you get to a profit that's taken, you get like a sharp reaction back in, like here, and you see like a fake out. Look like Connor Woods. Well, it's funny that. Can I DM you after the live sessions? Yeah, of course you can. No problem. All right, then we're going to do the giveaway in a minute, guys. We're approaching an hour, and I've got things to do. Although I could. Bitcoin. Christ, what's happened to Bitcoin in the last hour? Nice injection of volatility on a Monday. Bitcoin. Yeah, if you look at Bitcoin, actually, just noticing something here. Okay, resistance here in Bitcoin. Could see rotation back down to 112,000. A lot of that underneath that is already balanced. If you want to try and scalp that down to, yeah, all of this is balanced. Look at that. Not my favourite thing to do, because if you actually look at the daily time frame, as I always say, daily time frame is still very much bullish. You can see that from the market structure. Did take out the all-time high, and we have had a bit of a sharp reaction, but this to me looks like typical inducement, where we see like this corrective phase, which sometimes can look a little bit like that, and then you get that. So still remain bullish on Bitcoin and on cryptocurrencies in general. They still remain, for me, a buy the dip market, not something I want to sell. And I do think at some point we'll hit 126 or 130. Will I trade it? No, because at the moment it's giving me sell vibes, and I don't really want to be selling it yet. So maybe let's just see if we can get some, I don't know, maybe some divergence at these lows. I don't know, it's just, I just don't want to trade it, to be honest. That's the bottom line. But I do remain bullish on it. How do you personally define an edge? An edge in the markets is a strategy which is profitable over the long run. So if you've got, say, 5 or 6 years of back-tested data on a strategy and it makes money, you've got an edge. Simple as that. And on that note, people, let's do the giveaway. Nothing's happened on my CAD yen trade. Oh, I was in a bit of profit a minute ago. Okay, so that's the only trade that I've placed live today is CAD yen. But very much got my eye on the US dollar and stuff as well. So I will be back, as I said, on Wednesday to do the 100k giveaway and cover the Federal Reserve interest rate decision live, including the press conference. I just need to sort out how I can get Powell next to me here talking with the sound. So I'll figure that out in the next couple of days, and I'll see you on Wednesday. For now, the giveaways, 250 entries today. It's the normal giveaway. Not that that's a bad thing, because we're still giving away 2 lots of $10,000 Atmos 2-phase funded challenges and 2 lots of 50% deposit bonuses into Taurex. You can see the entries. It's completely at random. If you do get drawn out as the winner, you'll be tagged on the chat. Do me a favour, drop me a message after the stream, and I will credit you with that prize. I will need verification that your username on Discord or X not matches up. I need verification that your YouTube username is actually you. So just send me a screenshot of your channel. Okay, good luck to those who are involved. And first winner to start off the week is Vikrant R. Vikrant R, you've won a $10,000 Atmos challenge. Well done to you. Good start to the week. Drop me a message, please, if you see this, or drop a comment on the channel, and I'll drop you a message. Second winner of that is Novice. Congratulations to you. You've won the second Atmos funded challenge. Deposit bonuses into Taurex, 50%, up to $250. Never give up. And Sarojini. Well done to all those winners. Amazing start to the week. As I said, people, if you didn't win today, Wednesday's the big one. 100K I'm giving away in one stream. 100K. So when you see the announcement video on my channels, scan the QR code there on your phone, follow me on social media, wait for the announcement video, share it out, or turn your notifications on YouTube to make sure you don't miss it. And I will see you on Wednesday for that stream, where I'm going to do the big giveaway. And also our September promotion is still up and running. As I said, if you scan the QR code, you'll see the promotion offer on the tab. Feel free to take advantage of that. And also, if you're on the website at any point, if you use code Connor with Atmos at checkout, you'll always have a discount. It will always match the September promotion. So don't miss out on that today. Good start to the week for those winners, and a good start to the week to start a prop challenge as well, because I think we're going to get some good moves. So thank you very much, everybody, for that session. I'll see you on Wednesday for the big giveaway, 100K. Remember, see you there. Hopefully you're going to be there, and yeah, hope everyone has a good rest of the trading day, and I will see you all on Wednesday. Take care, everybody, and if you need me, I'll be in Discord. Cheers.